Good evening everyone, Ads here from Unity Trading Group. Welcome to Monday. Before we begin tonight, hit that like button, tap the subscribe button if you can, and of course tick the bell to stay updated on all of our future updates. Of course, we try our best to stream 5 days a week. Of course, life gets in the way sometimes, but we aim to be here all week. So if you have any questions, any queries, or even want to join the Discord where we are spending most of the day, you can find the links down below, and of course leave a comment and subscribe to the channel if you can. I'm Ads, and we will begin with BTC. It is 8:27 p.m. here in Melbourne. I'm swiftly running out of time for this update. We usually like to keep them a little bit timely, so before 9 p.m. Melbourne time is ideal. Even before 8 p.m. is better. Of course, I had a few commitments this evening, so let's get stuck into it. We'll have a look at BTC, Ethereum, and then we'll go over to the DXY. So, BTC, where are we at? Where have we been? So, over the last week or so, we've been looking at this level of supply here, drawn in very nicely between about 57 and about 56. So during the last couple of days, we've pushed through this level and pushed up to the negative 27 fib extension, like or so it should. The Fibonacci levels are your best friend when it comes to trends like these. You can even see the validity of Fibonacci drawing from left to right. In this instance, we pulled back to the 38, which is the most common level for a movement to the upside. That retest was pretty much perfect, picture perfect, and then a movement to the upside again to the negative 27, back down to the 00, and then we are continuing up towards our upper level of supply at 60k. So a very predictable amount of price action for BTC over the last couple of days, and I'm happy to report that if you are using Fibonacci in the right way, and the right way is just drawing from left to right using the extremities of the chart, you would have, and we did, so not hindsight trading in this instance, we were looking at the 38.2, the 23.6 very actively over the last couple of updates that we've put out on YouTube. You can find those videos in our channel, or you can click on our link down below to have a look at those videos from last week. But we were actively looking at the 38.2 for a bounce and a movement to the upside, and that is what eventuated for BTC. So if you haven't looked at Fibonacci, or you don't actively use Fibs on your charts so far, I do encourage you to, because they are very valuable. Now, in regards to the other sort of indicators we're looking for, so the RSI, actually one thing about the RSI, it has just recently been updated, and what I'll do is I'll change that on my chart to reflect the update. So if you go to indicators, you can go UTG/RSI, it'll come straight up. And now you can see the difference immediately. We've got the update reflected on that indicator. So what we've added to the RSI, not only was it fantastic because it was keeping you in or out of a trade, whether it was under the 50 or trending below the 50 or trending above, we have now added divergence. So it will tell you when there is divergence on the RSI. This is completely free, this indicator, so if you want to use it, you're more than welcome to. And of course, it has been upgraded with a little bit more tech, should I say, to give you an indication on divergence. And of course, we've added hidden bearish, hidden bullish, regular bearish, regular bullish, and of course, RSI entering overbought, RSI entering oversold, which is over the 50, under the 50, and all those are able to give you or push alerts in any way that you would like them to on TradingView. So we've added all that functionality for free. What I want to bring up is the UTG Gravy Train indicator. You can see the validity of Gravy Train. Of course, it is calling long or calling an upside potential for BTC currently. Our top or upper level in terms of our level of supply sitting at around 60k lines up very nicely with the gravy train cloud structure there you can see circled on the left hand side. So if I'm just getting rid of this for now, our next area of interest for BTC, for me especially, would be around that $60,000 mark, and that is a very nice level of supply. And you can see the liquidity that we had to the left of that zone as well, to give you an idea on how that zone was formed and what we are looking towards. Now, I've seen this formation being thrown around as of late, which is an inverted head and shoulders. It is valid, in my opinion, on this time frame because it is at the bottom of a bearish market cycle, and we have seemingly been retesting that neckline, and of course we are pushing off it now. If we do push up to the 60k mark, it'll more than likely, or it will confirm that pattern. Whether or not we get an exponential move back to 64k immediately is going to be another thing. However, the formation is there nonetheless. So just to summarize, of course, we are trending above the 50 RSI, as you can see that in green. And of course, our next area of interest is 60,000 for BTC that resides around that level of supply. All right, ETHUSD, a very impressive feat that we've been seeing from this pair, especially over the last couple of days, just been tearing to the upside. And again, Fibonacci showing its worth, because we are drawing from left to right. We didn't unfortunately get the 38.2 pullback, but it would have given us, or it has, excuse me, not would have, it has given us the area that we needed to look towards. That was the negative 61 Fibonacci extension at 32.25. So just in general, what I'm seeing on the chart currently is it's quite overbought now. So we've got an RSI of 78 or 79 on the 4-hour time frame. Steamroller, our homegrown indicator, is telling us that it is quite exhausted and it is at that top of the market cycle. Whether or not we can relentlessly continue to the upside or not is another thing, but the TA in general saying it's a little bit overbought now, and a pullback wouldn't go astray. We are looking at a cluster in the center here around the 38.2 mark for a pullback if we're going to get one. I think we will, to be honest. The 23.6 and the 38.2 look okay for a pullback in my opinion, and I think that will probably come over the next, or the remainder of this week. Looks to me like it would be an ideal place for Ethereum to pull back, or an ideal time frame, should I say, not place, for ETH to pull back. And I think the 23.6 at 2900 for Ethereum is going to be the first point of call, if not even 3k, which is a psychological round number. So we could expect those two levels to be tested over the next probably couple of days if it doesn't continue. Not saying short the top, not saying this is the top, not saying that you should sell here. I'm just saying that it is due for a pullback after a relentless run on the 4-hour time frame currently. Now, moving on, last one we'll have a look at this tonight. We are stretching the friendship in terms of time tonight. We have been looking at the DXY for quite some time. It is a regulated market. This isn't financial advice, just ideas and opinions of us here at UTG, So the DXY in general is continuing its bearish pattern. We have, tried to retest or tried to give us a few bounces here and there, and this one being the most notable from 90.40 up to around 91.4. So an entire 1 point difference in the DXY index there. But in general, we are being rejected on the previous liquidity, and we did fail to meet or to reach our most, our highest level of supply there. So this is looking like it will come down and retest our level that we did draw in a couple of days ago at 90.86. You can see the liquidity to the left-hand side and the reasoning behind that level and why it is there in general. So I think the easiest point of call for the DXY is to expect it to come back down and retest that 90.86. If we are drawing the lower time frames, let's put Gravy Train on and give us an idea. We are stopping the long here, and you can see Gravy Train's worth. So Gravy Train is a homegrown indicator by us. Of course, here at UTG, we developed it. We spent a lot of time on this, perfecting it, and you can use the levels of the cloud to give you resistance and support. And of course, if you were to draw in that resistance, you can see the validity of the DXY. This works on all pairs, all markets, works on all time frames. So you can see that there. Of course, the DXY has been retesting the center section, or the even grey section of the Gravy Train cloud there now. So it is in a moment of indecision. This could break either side. We could expect it to come up and break up and give us a cross to the upside, creating a green cloud and expecting more upside, or we could cross back down into the red or back down under the cloud to create another red and another market cycle that is to the downside. So we'll see how we go. You have my opinion. It will more than likely, in my opinion, end up at the 90.86. I'm Ads from UTG. Thank you all for joining me tonight. If you haven't already, check out Gravy Trade. The links are down below. If you haven't already, check out UTG RSI. We are giving this away for free, of course. Look, Gravy Train proves its worth the more that you play with it. So if you haven't had a look at it so far, I do encourage you to do so. Again, I'm Ads from UTG. Join the Discord with the links down below, and we'll see you tomorrow. Bye for now.